Welcome back, and we're joined live by Venkatraman V, who's the Executive Director at Federal Bank. Very good morning to you, Mr. Venkatraman. Talk to us first off with regard to the margin number. You know, that has really been impressive in terms of the margin recovery. Talk to us about what's led to that recovery, what are the components, and how much of that will play out in Q4? What's the visibility like? Because we don't know what the rate cuts could be going forward, but at least in December there was a 25 bips rate cut. I'm trying to assess how much of that gets accrued to your book in Q4.
Yeah, good morning, Harsh,
Very
and
good morning
thank
to
you for having me on the show.
Great having you.
Like you said, yes, it's been a strong quarter of operational performance, and specific to your question on NIMs, it's a combination of work done on both sides of the balance sheet, both liabilities and assets. On the liabilities, you would have noticed that the mix has changed favorably and more strongly towards the CASA. CASA has grown about over 6.5% in this quarter and 19% YOY. So on the liability side, it's the mix. And on the asset side, it's the repricing, which has helped us in terms of improving the NIMs. Obviously, the cost of funds, cost of deposits did go down this quarter. But overall, a very strong quarter in terms of NIMs. And in terms of the rate cut and how it will play out, see, the December rate cut, we will still see two-thirds impact coming through in this quarter for us. Having said that, our endeavor is to ensure that we try and maintain the NIMs at the current levels, assuming no further rate cut this quarter, Harsh.
Okay, you're also looking at a book which is a higher yielding book. How gradual is that journey? Because and how much of that higher yielding book contributes to margins in this quarter? Because that gives us a sense as to what it will look like going forward as well.
Yeah, see, the identified segments of the medium yielding assets, as we call it, generate the alpha in terms of the margins. The medium yielding segment, if you have seen over the last many quarters, there's been very strong growth demonstrated in commercial banking, in CVC, in gold. Gold has grown 9%, commercial banking 5.4% this quarter. The most interesting and impressive fact is both business banking and LAP, which were turning around in the last few quarters, have shown very strong growth momentum this quarter, around 4.5% for business banking. LAP has also come out quite strong. And so we believe that the focus on the medium yielding segments will continue, and there is enough and more opportunity for us to continue the trajectory on the chosen segments. This quarter, we also saw good growth coming through in corporate banking. And whilst it was quite high in terms of percentage, but going forward, again, what we are trying to anchor is more on the mid-corporates, where the margins are relatively better than the top end of the corporates.
And your fee income, if at all I can call it that, Mr. Venkatraman, was a bit on the softer side. Talk to us about what's playing out there, and what are the levers available to grow that, or will that largely stay steady state as the operational or the NIM focus remains more solid? Give us a sense of how this plays out.
Harsh, the core fee income was the highest ever for the bank this quarter at 896 crore. Now, when you look at QOQ, it may appear like 2% growth, but what is important is the base is growing, it's high. And we measure the fee income as a percentage of assets, and that is moving in the right direction. And both NII, fee income, and OP, all three has been the best ever quarter for the bank. And the fee income, obviously, the composition, there are various components which is helping us, whether it's processing fee from various business lines or forex and trade. And the visibility in terms of fee income growing is quite strong. We have levers like we'll be launching our wealth offering very soon. Trade and retail FX is another segment which is yet to play out. So once these are getting into mainstream and we see them contributing, we do expect the fee income trajectory to maintain the strong growth as we have seen in the past.
Right. Mr. Venkatraman, hi morning. This is Snehi also joining in. Talk to us about the Blackstone investment. About 10% stake is what Blackstone is going to be acquiring with a capital infusion of more than 6,100 crores. Talk to us about what this does to your growth trajectory going ahead. How is this going to affect your capital adequacy?
Yeah, in terms of Blackstone investment, just by way of info, we have received the approval in the EGM after the director's approval, and also we have received Competition Commission of India's approval. We are awaiting approval from the regulator, from RBI, which is expected this quarter. In terms of impact on the capital for this quarter, assuming it comes before 31st March, it will be about 50 bips additional to crore. And in terms of growth, your question about growth, yeah, we had indicated in the earnings call as well. Based on the current trajectory, the momentum, we expect to be growing at mid-teens. And if opportunity presents, we would then accelerate the growth further. But at this stage, the outlook is to maintain a mid-teens growth.
Interesting. Does Blackstone come in with a slightly differentiated strategy for Federal Bank? How does Blackstone look at the investment? Do they look at it more from a very, very long-term perspective? Are they virtually like permanent holders, in your opinion?
Big investor, and it is always good to have one such marquee name who has a long-term view. They haven't come in with a short-term view of an investment here, and that has been demonstrated by their holdings in few other companies in India where they have held on for 7 years, 10 years, and all that. So at this stage, we believe they are here, and that is a reinforcement of the bank's strategy, the opportunities which the bank has, and their confidence in the bank to execute. At end of the day, Harsh, it's all about execution.
That's true. With regard to growth, does this give you a larger headroom to grow, and do we see a much more aggressive growth path for Federal Bank?
See, growth will always be based on the opportunities which present and based on our assessment of credit. It's important to maintain the discipline on credit quality. We don't want to be reckless just because there is capital available. We'll be quite mindful. But at the same time, like I said earlier, we are seeing last quarter, we saw 4.5% growth in advances, which translates to about 18%. But we are saying 14 to 16% is the range right now. And if opportunities present, yes, why not? We will capitalize on those.
And you're looking to keep your cost to assets or cost to income quite range bound in that sense. How do you manage that? Because you want to grow aggressively, you want to diversify in terms of geography, and you want to keep that cost to income in a tight band. That's tricky, right?
It's a fine balance, Harsh, yes. And we have to make sure because we don't want the cost to income to go completely higher from the current range. We are operating around that 53 to 55 range. And we have said that in the next 2 years will be around the same range because we need to be investing, like you rightly said, in distribution, technology, and various other initiatives. But it's about calibrating, making sure that the investments start paying off quicker, sooner than later, and then having the ability to invest as well. In our case, it's more of an income trajectory. So as we start seeing the income moving up, the CI ratio will be range bound and will give us the room to invest on the areas we have identified.
Okay. Mr. Venkatraman, very quick last question. Personal loans and MFI. Both of those have largely been flat when you're looking at it YOY in terms of your book. Do you believe that the next 12 months materially better for both of these businesses and therefore all your engines will likely start to fire in terms of growth?
See, on MFI specifically, it's a conscious choice which we have made given the external circumstances. We still believe we need to give it maybe a quarter more to see things bottoming out, and then we should start seeing the growth coming through. On personal loan, we are kind of working through various options, whether it's the organic route or through partnership. Some partnership growth on PLs has started kicking in. We are seeing the growth coming through. So we want to be quite mindful of the choices we make because in the unsecured, we may end up growing faster initially, but the pain will come later if we are not careful of the quality.
Okay, thank you so much, Mr. Venkatraman. This has been a pleasure speaking. And of course, after a marquee transaction, it's always good to have a view with regard to how the bank is thinking.